Welcome back to Solutions for Financial Independence. Joining you now, Keith Dumas with Beacon Wealth Management. How are you doing, Keith?
Great, Nikki. How are you today?
Doing well, thank you. This week we have a question from John in Bridgeport. He says, I'm a small business owner and I recently met with my tax advisor and he stated that I needed to consider making larger contributions to my retirement funds to alleviate my tax burden for 2016. What are some of the things I can do to defer my taxes until after I retire?
Yeah, I know that's a long question, but to set the question up, have to know that information. So someone who's met with their tax advisor and they're saying to alleviate some of the tax burden that they do have today, then what they need to do is potentially look to make more contributions that will be taxed in the future once they withdraw them. And the way to do that is through your retirement plan contributions. So there's really two different ways we're going to look at this. One, we're going to look at it from an individual in this case, and then we're also going to look at it from someone who might be a small business owner or just a business owner in general. And so that's the two ways we want to look at it. First, let's look at it from the individual standpoint, where you might want to make contributions to your own retirement plan. We always recommend you do that first, so you're looking for the match to get the maximum of that. So if you can do it, depending on the type of plan that you have, there's different limits based on the plans that you have. Try to maximize that. The next thing we would suggest in that case is go and look at doing an individual IRA contribution, which you might be able to qualify for. That's something you would have to discuss with your tax advisor as well. But you can do potentially another $5,500 there. If you're over the age of 50, you can do an additional $1,000 there. So there's ways to continue to make those contributions, and you can do that for both you and if you have a spouse, whether they're working or not. You can do it for them as well based on your income. So those are the two. That's the way you want to look at it from an individual. From a business owner perspective, you want to look at it as for yourself, number one, maximize your contribution, but also you can give a match to your employees. But in addition to that, you can look at a profit sharing plan, potentially a defined benefit plan, cash plan. You can do that. So those are the types of things that you really want to kind of look at if you're a business owner as well.